Welcome to the webinar. Welcome to NASE Tax Talk Presents. On behalf of the National Association for the Self-Employed, my name is Keith Hall. I'm the National Tax Advisor for the NASE, and today we're going to talk about the Schedule C, what you need to know. The Schedule C is the primary tax form for sole proprietors that is attached to your personal tax return that includes all the income and expenses and other information that the IRS needs from us as small business owners. So hopefully today, the next 30 minutes or so, you'll get a good understanding of exactly what the Schedule C is, how to prepare it, and some valuable resources to help you attack that Schedule C. Believe it or not, the IRS expects there to be 23 million Schedule Cs filed for this tax year. That's 23 million small business owners that'll file a Schedule C. That's almost 1 out of 6 families. 1 out of every 6 tax returns is going to have a Schedule C attached to it. That is a giant number of small business owners. Very powerful segment of our economy. I wish I could find some way for all of us small business owners to vote as a block. If we could figure out how to do that, then all of our representatives, our presidents, senators, congressional representatives, all those people would be small business advocates. Over 70% of all new jobs generated in this country come from small business owners. That is significant. And according to the Kauffman Foundation for Entrepreneurial Activity, there are 560,000 new entrepreneurs every single month, if you can believe that. Very, very powerful segment of the economy, and it's growing every day. Now, the main point of this, of course, is to let you know maybe the most important thing I want you to know, and always remember, you're not alone. There are millions of us out there, and there are resources available for you, including the National Association for the Self-Employed. It is so easy as a small business owner to kind of get stuck. You feel like you're all alone. You got to do everything. You're the CEO and the marketing director and the accounting executive, but you also have to clean up at night. You've got to do everything. And it's very easy to feel like you're out there all alone. Do not let that feeling prevail, because you do have resources. You're not alone. So let's get started. Let's take a look at what we want to talk about today, and that is the Schedule C. Here is a current copy, and again, this is the primary form that small businesses use to report the income and expenses related to their small business. There certainly are other forms that you're probably going to need. You're probably going to need a depreciation form, Form 4562. You may take the home office deduction and use that Form 8829. There are always other forms, but this is the main form for a new small business. Now, if you check out this form real quick, you'll notice that there are basically 6 sections to the form. The very top part is just an introduction. Then there are basically 5 parts. There's an income part, an expense part. Back on page 2, the second page of the form, there's a cost of goods sold section. Then there's information about the business use of your car. And then lastly, part 5 is other expenses. So there's basically 6 sections, an introduction, and then 5 specific parts. And we'll go through each one of those to kind of go through its background and what its useful part is. But really, there are really just those 6 parts. The very first one, of course, the first thing to keep in mind is you don't just have to worry about this form. Don't forget that the IRS also gives us some other information to help. There is a complete set of instructions that goes along with this form called the Instructions for Schedule C. You can download these right at NASE, at nase.org, both the Schedule C and the instructions to the Schedule C if you don't have copies of those. You can also download those directly from the IRS website. So keep in mind, I'll talk about these instructions a little bit later. We're going to need those for some of the information to complete the Schedule C. So you will need to have access, whether it's online or actually print off a piece of paper that has those instructions to the Schedule C. So keep those in mind as well. So now back to the Schedule C. Let's jump right in. The very top part of this, the first section, is the introduction section the part that's near the top of the form. And you'll see here that there's a lot of this information is pretty self-explanatory. Your name goes on the name of proprietor right at the very top. That's the same name that you would put right on the front page of your tax return. Then actually put down what you do. What services do you provide? Are you an architect? Are you an accountant? Do you provide consulting services? If your company has a business name, if you are like Keith's Consulting Services or Paradigm Resource Consulting, that's the blank here to actually include the business name. And of course, they want your address, city, state, zip, all of that good stuff. Now notice over here to the right also, there are two different places for a tax ID number. There's a place for a Social Security number, and there's a place for an employer ID number. Now, if you don't have employees in your new small business, you don't have to have a separate EIN or employer ID number, in which case you can just include your Social Security number right on the Schedule C. Now, I personally like for small business owners, including myself, my clients, I like for you to have an employer ID number to go along with your business, even if you're not required to. Even if you don't have employees and don't have to have that EIN, I like getting one for the business, and this is the reason. Many of the clients that you provide services to may ask you to complete a W-9. They may have to give you a 1099 at the end of the year, and they're going to need your tax ID number. Well, I like giving my Social Security number out as infrequently as possible. So if you don't have to give your Social Security number out, it just helps with that whole fear of identity theft. So having an employer ID number that goes along with your company then gives you the ability to give your clients that EIN rather than giving them your Social Security number. So I encourage you to get an EIN for your business. If you don't have one, very easy to do. You can download a form SS4, which is an application for an EIN. You can actually download that form right here at nase.org, or you can go to the IRS website at irs.gov to get that form. There's a phone number in the back. You can actually call them on the phone and get the number right on the phone. So it's very easy to do, but I encourage you to get that employer ID number. But this is where it goes on the Schedule C. You'll also notice down here also this line F. Oh, let's go backwards a little bit. Let me talk about this line B. This is very, very important. Notice there is a 6-digit code here that the IRS wants you to include about your business. Now, this is the way they keep track of statistics. Unfortunately, this is part of their audit selection process, ratio analyses. They want to put all similar businesses into kind of a general group so that they can analyze all that information. So they want to know what type of business you have and have a code that goes along with those types of businesses. Now they give us the codes. Remember that Schedule C instructions that I talked about. In the back of those instructions, beginning on page 9 of those instructions, there's basically 3 pages of just codes. You'll see a number of codes here. Maybe you're working in a collection agency, maybe you're a fisherman, maybe you do hunting and trapping. You can see all those numbers here on the form, but find the one that most closely matches what your business does and then use that 6-digit code in that line B. Now I will draw your attention on the second page. There is one group, this is kind of a catch-all category for people who provide consulting services. And many small businesses out there do just provide their expertise to their clients, and it may be non-specific. So notice this code number 541990, which is all other professional, scientific, and technical services. Lots of consultants, freelance consultants, use that code as kind of a generic catch-all code. But again, don't take a shortcut on there. Read through those lists, find that code that is closest to the business that you provide, and then put that in that code in that box B on the front of Schedule C. And again, that's a very important number to pick because you do want your business to be compared with businesses of a like kind. So make sure you're diligent in picking the right code for that box B. Now let's move down to that next section, which is that line F on the Schedule C. This is the accounting method. Now this is something that's also very important. Now most small business owners use the cash basis of accounting. You probably have heard about this, cash versus accrual. Cash basis accounting basically means you record income when you get the money, you deduct expenses when you actually write a check for the bill that you pay, so the cash is kind of the king in ruling the accounting records and tax records for that business. It's the easiest one, and again, most small business owners choose the cash basis of accounting. You may choose the accrual basis accounting, a little more difficult. Maybe you've got an accounting background and maybe that's not difficult, but the accrual basis of accounting basically says we record income when the earnings process has been substantially completed. So maybe you do a work for a client for a month, you've completed all the work, and at the end of the month you send them a bill. Well, when you send them that bill, you've substantially completed the service. That's when that money is recognizable as taxable income, even if you haven't gotten the cash yet. So you can kind of see the detriment there for a number of small businesses is if you record that income and the person, your client hasn't paid you yet, now you're going to be subject to potential taxes on that income and you haven't even gotten the money yet. So that's kind of the downside. Now the reverse is true for expenses, but evaluate which of those make sense to you. Again, most of the small business owners use cash basis, but whichever basis you have used, you need to indicate here on the form to the IRS which of those methods you use. Now don't forget about these other boxes as well. These are just check the boxes items, but these are important things that the IRS wants to know about your business. Notice the line G here, did you materially participate in the operations of the business? Now the key point here is if you don't materially participate, this may just be an investment for you or something like that, you may need to put this on a different form. The losses, if there are losses from that particular business activity, may be limited. Now again, for most of us, this is your business. You're making the furniture or you're providing the services. So of course, you materially participated in the operation of that business. So then make sure you answer these questions at the bottom. Notice line I and line J. These are relatively new things to this Schedule C. They're asking you, did you make any payments to other independent contractors for which you need to file a 1099? Now, you do need to file a 1099 for those businesses for which you paid at least $600 for services during the year. So if that's the case, make sure you check yes here. And of course, if you check yes on line I, make sure you can also check yes on line J, because obviously if you were required to file forms, make sure that you actually indeed did file those forms. So certainly don't click yes, you should have filed forms, but no, you didn't do those. So make sure you file the forms that you're supposed to file. Very, very important, of course. So that kind of gets you through the top part of that Schedule C. Again, pay particular attention to that business code. And again, I would recommend considering getting that employer ID number as opposed to using your Social Security number on that form. So that way you don't have to send it out in W-9s and all that other things. Okay, let's move on to the next section. We actually start talking about some numbers now. We've got the top part of the Schedule C completed, all the personal information. The next section, Part 1, is the actual income section. Now this is relatively straightforward. This is basically where you include all of the cash collections or your accrual-based income, for example, but this is where all of the income that you've included, that you earned during the year goes on the Schedule C. Now notice this line 1, for 2011, they want you to put 0 here. This is a line that is reserved for years 2012 and later. There is a pending rule before the IRS. They're still talking about this, but they want us to include all of the income that we received in our business via credit card activity. So there should be some reporting requirements. We'll know how much of our income was generated via credit cards, and that will go on line 1A. But no need to worry about that for this year. Come back to NASE.org. We'll keep you posted on new developments for this particular requirement. But for now, most of the income that you receive will go right on line 1B. This is the gross receipts, the total money that you received for the services or products for your small business. This should be the total receipts that have gone through your business bank account during the year. So make sure you kind of do a reconciliation that you've included all of that income. Now, you may also have a question out there of, hey, I got a 1099 from a company, but maybe it wasn't all your income. Maybe there was a mistake on the 1099. Or maybe you got a check from someone and they returned the product. So make sure you include all of the income, all of the receipts on line 1B, but if you gave some money back or there was a mistake, include that adjustment on line 2. That way you won't have to pay tax on it, because you shouldn't if you didn't actually have that income, but you then have also included all of the receipts that may already be reported to the IRS. So don't just net those two. Now, another important part of this particular form, you'll notice line 4 is cost of goods sold. Now, cost of goods sold actually is part 4 of the tax return, and we'll talk about that, part 3 of the tax return, in fact, the 4th section, but part 3 on page 2. We'll talk about that in a second, but the calculation of the cost of goods sold is carried forward to line 4. So make sure you do that cost of goods sold section if that applies to your business, and then carry that number back to line 4. Now, when you're finished doing all those calculations, down on line 7, you'll end up with the gross income that you have from this business. The most important thing here is make sure you include all of the income that you collected in your business, whether that was credit card collections, whether it was cash collections, paid by check, whether it was barter income, you know, the actual exchange of services between you and a client. Make sure you include everything. This is the part of the tax return that if you intentionally leave income off of your tax return, that's the F word for the IRS, which is fraud. So make sure you're extra diligent at making sure you get everything included in this section. Then we can be more creative and aggressive at determining expenses or deductions in the next section of the Schedule C. But make sure you include everything on that Part 1 of the Schedule C. Okay, let's move on to the next section, the 3rd section, Part 2 of the Schedule C. You'll notice, and this is kind of the one that probably has more questions involved. I had talked earlier about the NASE Schedule C A to Z book. Most of the book concentrates on this section of the Schedule C. Exactly where do expenses go? Now, just reading through these lines, many of them are self-explanatory. Advertising expenses. Of course, if you pay for a Yellow Pages ad or use a billboard for advertising, those type of things obviously will go on line 8. Notice line 20. There is rent, whether you're renting vehicles or machinery, maybe renting restaurant equipment, or you're actually having rent paid for your office space. Those items go on line 20. Line 16 is interest, whether or not you're paying mortgage interest for a particular piece of property that you use in your business, or you're paying interest on a line of credit, a working capital loan. Those interest expenses obviously go on line 16. So knowing what the expenses look like, the definitions on these particular lines, can give you a good idea of how to set up your chart of accounts, whether you're using Quicken or QuickBooks or Peachtree, or just using a manual ledger. If you have the end result of the tax return, knowing that you need to group your expenses according to this part of the Schedule C, that can help you then organize the record keeping you have for your business. Now, there are a number of items on this Schedule C that have more questions than others. A part of that is because they're just pervasive. For example, line 9, car and truck expenses. Almost all small businesses have something on line 9 because all of us use our car or truck in our business. So we get lots of questions about this. The IRS also gets lots of questions about this. Notice line 24, travel, meals, and entertainment. That's also one that almost all of us have something on line 24. So the IRS gets lots of questions about that. We here at NASE get lots of questions as well. So the IRS actually has a publication that can help you with those specific items. And that's Publication 463, Travel, Entertainment, Gift, and Car Expenses. You'll notice that Chapter 4 is all about the car expenses. So it'll help you evaluate whether you have commute miles, whether you have business miles. Again, we'll talk about that a little bit more in just a second. But here is a publication that you can download directly here at nase.org that can help you with everything on line 9 and line 24. So make a note of that Publication 463 and keep that one in mind. Now, most of us also have something that goes on line 13, which is depreciation and Section 179 expense. Now, the reason most of us have something here is because most of us have a computer these days. Most of us have an iPhone or other equipment. Even if you don't operate a big restaurant where you have a bunch of equipment, you probably still have a computer that can be depreciated and give you a valuable deduction on your tax return. So that information goes on line 13. For most of us, the IRS gives us accelerated depreciation options so that if you spent $2,500 on a new computer, it most likely is going to be fully deductible in the first year, but it still must be calculated using depreciation. So as you probably guessed, the IRS gives us another publication to help with that one. And that publication is called Publication 946, How to Depreciate Property. Again, step by step, very easy to understand. You can download this one also right here at nase.org. So make a note of that Publication 946. Okay, one other one that is very valuable, you'll notice line 30 is expenses for the business use of your home. Many small businesses these days, particularly sole proprietors, operate out of their home. If that's the case, you most likely qualify for the home office deduction. Very powerful deduction, one that many people overlook because it doesn't show up in your business checkbook. So again, keep in mind that IRS has a very good publication, helps you step by step with the calculation of the home office deduction, the numbers that actually go on line 30, and it's called Publication 587, Business Use of Your Home. So make a note of that one as well. Also can download that directly here at nase.org, but that can help you save some money. It can also help make sure that if you are choosing that deduction, that you actually get it right. So make sure you bookmark this website, nase.org, and look at Publication 463, 946, and 587 in evaluating this section of your Schedule C. And again, as you go through and fill out this Schedule C, whether you're using a CPA or you're doing the tax return yourself, maybe you're doing it yourself and having a CPA review it, keep your records kind of in the same order as this schedule. Then if you ever do get audited, or if anyone asks you questions about your tax return, your support, the receipts you have, the canceled checks, the invoices, those type of things can be organized in the same manner as you report them. If they ask a question about line 24, you can have a file folder that has all of those line 24 expenses. Very easy to answer the question that way. Now I want to point out one other thing. Notice line 27, that says other expenses. So if you're not sure where something goes, you may have a unique item, something that you want to provide more detail based on your specific set of circumstances. This is actually the last section of the Schedule C, that Part 5, other expenses. Remember we talked about that other section? This is the second page and the last section, and all this section does is give you a place to provide more detail. So you notice there's no information here, there's no restrictions. You can just list what the expense is, put the amount, all the items that you list specifically on Section 5, Other Expenses, then sum those totals. You'll see total of other expenses on line 48. Then that total comes back to the front page of the Schedule C and is included right on line 27. So that's how that last section of the Schedule C works. It is only included for more detail. So again, don't use that as a cop-out. do your best to organize those expenses on the other 26 lines. But if you're just not sure where something goes, you're not sure exactly how something is counted, you can use that line 48. Also, don't forget, if you've got a question, we're here to help with that. We've got experts ready to answer your questions right online at NASE.org. NASE members can ask their question, ask a specific item about which item goes on which line, and we can help you with that process as well. But this, again, this section of the Schedule C probably is the one that has more questions from IRS auditors, as well as more questions from the small business owners trying to complete the return than any other section. So pay some attention to this. Make sure you make a note of those key publications that we talked about, and then you'll be in a good position to fill out all of those parts of the Schedule C expense section. Now, there's one other thing on the front page of this Schedule C that I don't want to forget about. Notice down at the very bottom in the right-hand corner, there are two little boxes that just ask you questions. Only one of these boxes is going to be checked, and it says, is all investment at risk, or some of the investment is not at risk? So again, you won't check both of these boxes, but you need to check at least one of these. So what does this mean? What does it mean all investment is at risk? Well, the key point here is, where did the money come from for this new small business? Is it your money? Did you borrow the money? Did somebody give you the money? You know, will you have to pay the money back? If the worst possible thing happens and the business fails, and you know the $10,000 that we've spent to try this new idea, who is really out the money? Okay, now most situations it's us. You're out the money. You use your cash, you use your savings, you use your credit card. Even if you did borrow money from the bank, if something goes wrong, you still have to pay it back. It wasn't free. If that's the case, then indeed your investment in this new business is at risk. Okay, the key point is whether or not that loss, again, if the worst thing happens and you do have a loss, the key is whether or not that loss is deductible. If you're not on the hook, for example, if it's not your money that you're losing, then you can't deduct those losses. So that's the key point here. So if that's the case, and again, that is the way for most of us, if that is the case, make sure you check that box 32A at the very bottom of your Schedule C, that all your investment is indeed at risk. That will make sure that the IRS won't question whether or not those deductions, the losses per se, will be excluded from reducing your other taxable income. So make sure you check that box at the bottom side of that Schedule C. Okay, that's very important. Now let's go back to that Schedule C. We've gone through the introduction, we've gone through the income, making sure you include everything on that income. We've gone through the expenses. Don't forget those publications that you have. Also, don't forget that with the NASE, you've got the NASE Schedule C A to Z book, which can also help you with the line-by-line guide on all of those expenses. So that kind of gets us through the front page of that Schedule C. So now you go to the back page, the second page of that Schedule C. Now we've kind of briefly talked about cost of goods sold earlier. Remember that cost of goods sold section was included as line number 4 in the income section. So this is where the detail of that cost of goods sold comes into play. Now this is a little more involved, a little more difficult. Not all of us have items included in this section of the Schedule C. The only time you have to fill out this section of the Schedule C is if you're actually selling things, products, books, furniture, rocking chairs. You're building something. You're building something to sell, or you're buying items to then resale. If you're in that situation, then even if you're using the cash basis of accounting, you still have to account for your inventory. And that's basically what the cost of goods sold section does. Okay? Basically, you have to say, I spent this much money buying my products or making my products. I sold part of them, but you can only recognize cost as a deduction for the items that you sold. You can't deduct the cost for the items that you didn't sell, the ones that are still in inventory. So maybe the best way to do this is let's go through a quick example to show you how this works. Let's say, for example, that you build rocking chairs. That's what you do. So this is your first year. You didn't have any inventory at the beginning of the year. So what you're doing now is you buy a bunch of wood, materials, glue, varnish, fabric. You buy all of those materials and supplies to build the rocking chairs, and it was about $5,000. So you spent $5,000 on those supplies. That $5,000 goes right on line 38. Let's say you also had a worker that actually worked with you on the rocking chairs, and you paid that worker $1,000. That $1,000 then goes right on line 37, cost of labor. Now let's say you have another worker that does your billing or accounting, works in the office, maintains customer support. That person doesn't work directly on the rocking chairs. So their cost, the cost of that labor, goes on line 26 of the expense section of Schedule C, not in the cost of goods sold section. This section is only for the expenses directly related to product. Okay, so you got $5,000 of materials, $1,000 of labor, so you got $6,000 in total costs. And let's say you were able to build 10 rocking chairs from that $6,000 in cost. So doing the math, that basically gives you a cost, and again we're using the cost basis in this calculation. The cost of each one of those chairs is $600. Okay, let's say you sell 7 of them. You've got 3 rocking chairs available at the end of the year. You know that your cost for each of those was $600. So your ending inventory is $1,800. So just doing the math, 6,000 minus line 41 gives you a cost of goods sold of $4,200. Now that makes some type of intuitive sense in that it costs you $600 to make each of the rocking chairs that you sold, and you sold 7 of them, so 7 times 600 is $4,200. So you recognized income for 7 chairs, and you recognized the cost for 7 chairs. The other 3 chairs are still in your inventory. Hopefully you'll sell those next year, and when you sell those, then this $1,800 will become cost of goods sold in the next year. Now remember that first section of the Schedule C, that income section, remember line 4, cost of goods sold, that $4,200 then flows forward to that Schedule C, page 1 in the income section. Okay? Hopefully that makes sense. Let me do another quick example just because it seems like examples help even better. Let's say now rather than building rocking chairs, let's say you buy books and resell them on Craigslist or eBay or on your own website. And let's say you bought 10,000 books and you got a great deal, so you spent $10,000 on 10,000 books. So your average cost per book is $1. Right now you've got no other materials or supplies, you don't have any other labor, so your total cost for the goods you're going to sell were $10,000. Now when you get to the end of the year and you do your inventory calculation, you notice that you still have 6,000 books left. Your cost basis was $1 per book. Your ending inventory valued at cost is $6,000. You sold 4,000 books, therefore your cost of goods sold is $4,000. So relatively straightforward. You know, once you start filling in the forms using the calculations of the cost compared to your ending inventory is the way you do the calculation. Now, if it's your second year, of course, the cost of goods sold calculation for the next year will begin with a beginning inventory. So notice in this example, the inventory at the end of the year was $6,000. That will also be the beginning inventory for next year. So carry that forward to the next year calculation. Again, if you've got other questions about this, make sure you bookmark the NASE website at nase.org, and we've got tax professionals that can help you with that information. So let's go back to the Schedule C. We've gone through the cost of goods sold. Now remember that bottom section, Part 5, other expenses, that was just the extra room for detail for that line 27. So we kind of already covered that. The last section here is Part 4, which is the information for your vehicle. Again, the IRS has put this right smack in the middle of the Schedule C just because so many of us use our car for business. So make sure you completely fill this out. When did you place your vehicle in service? This should be the date you began your business. If that started last year, 2 years ago, use that date from 2 years ago. If it's a brand new vehicle, the day you got it can be the date you placed that in service. Obviously, a very critical number on this form is the business miles that you drive. Okay, it is very, very important that you maintain a business log of all the miles that you drive. If you get audited, if the IRS asks you a question about your tax return, this is most likely going to be one of the questions they ask, and they're going to ask to see that mileage log. So you got to keep track of that. There are two methods that the IRS allows us in calculating our deduction. If you use the standard mileage rate method, then all you really need is that business miles, because that'll give you all the detail that you need to determine the deduction that ends up on your tax return, but you still must have that mileage log. Okay, very, very important. Now also, don't forget to answer these other questions, line 45 through 47. Was your vehicle available for personal use? Do you have another vehicle available for personal use? Notice number 47. Do you have evidence to support that deduction? That's the mileage log that we're talking about. Okay, so make sure you go through, read those questions, and make sure you answer those. May not seem that important, but it is important. So make sure you take the time to answer those questions as you go forward. Okay, so hopefully that gets us through the Schedule C. Again, the Schedule C is that primary form. 2 pages, 6 sections: introduction, income, expenses, cost of goods sold, the information for your vehicle, and then that other detail if you need that extra detail. So that's basically how you communicate to the IRS all of the information related to your business. Okay, now don't forget those other publications that we talked about. Publication 463 to help you with your car and your meal expenses. Publication 946 to help you depreciate the cost of that computer that you bought for your business. And Publication 587, which is that home office deduction worksheet that will help you through that process. Make sure you remember NASE.org. Whether you've got questions about any of those publications or any of those line items on the Schedule C, make sure you know that you have resources there to help. Don't forget, we have got experts standing by to answer questions, not just about taxes, not just about the Schedule C, but any other questions that you might have that can be helpful in managing your business. So make sure you bookmark our website, nase.org, and when you've got questions, we've got some answers to help you. So thanks again for joining the webinar. You've been listening to the Schedule C, What You Need to Know. My name is Keith Hall. I'm the National Tax Advisor for the National Association for the Self-Employed, and I hope this has been helpful. Thank you.